Good morning and welcome to the show.
You're watching Famous Dave on YouTube.
Hello, welcome back. You're watching the Short Vol Show live on YouTube in pretty much typical fashion. As soon as I set a schedule for this week, and I am trying to adhere to a schedule now of coming on at 9 a.m. Monday, Wednesday, and Fridays. As soon as I started a schedule, of course, the second show, the internet was down and I couldn't do the second show. So that's why there was nothing really going on Wednesday. And I know it seems kind of strange that I was posting online that the internet was down. And what that was that I was able to tether my phone to get enough bandwidth to like post to Twitter, but it really wasn't enough bandwidth to actually run a live stream from. So that's what the deal was with that. And of course, it went back. The internet went back up in our area a few hours later, but by then it was kind of too late to do the show. Anyway, I wanted to talk to you a little bit about what we're doing right ahead of the election here and what's going on. And the first thing I wanted to talk about was, and I've said this before many times, but when you look at my positions, when I show you my positions, I always say, like, this is an example of a trader trading, but not really directly follow what I'm doing. And the reason for that is because, I change stuff all the time. And it's funny, I did the show on Monday and I said, well, I'm leaving this position. I'm short some naked calls in UVXY, and I'm planning on just not touching this position for a while. And then about 10 minutes after the show was over, the market started to sell off, and I immediately covered my position and actually got long UVXY. Not a whole lot long, but long a little bit of UVXY. As we sort of spiked. Let's take a look at Monday for a second. And we had kind of a big spike. I mean, we've got the VIX got to over 40. It's been doing a lot of stuff between trading sessions as well. But if we kind of go back over the last few days, and let's take a look at a 10-day. How about that? So here is the 10-day chart, and you can see us big spike, right? And so in here I covered my short position, and then what I ended up doing was, instead of being short naked calls where you can really get blown up if it spikes too high, you can actually lose more money than you have, I switched here to, and I'm not like coming on and saying I was a genius, because I was not like long vol for this big up move here. I was actually short VXX here. So I switched my position from right in here from being naked short calls in UVXY to being long. And so I rode up a little bit here being long. But then this next day here, I was short. I had a VXX calendar spread on. So I was long the VXX 21 March puts, and I was short the front month puts, which all in all had me a little bit short delta for this move up here. And so I lost money on this move up here. But then yesterday I came in overnight 2 days ago. I was flat, overall flat position. But then I came in yesterday and I got short VXX right on the open. I bought a bunch of puts, and we essentially went straight down from there. And once we went straight down, somewhere in the afternoon, I hedged most of my positions. So I was short about 600 deltas coming in yesterday, or that I put the position on yesterday morning. And then I hedged about half of that position in the afternoon by selling front week puts against it. So right now my position is, you can see it here. I'm long March 22 puts, and I'm short Nov 22 puts. And so it shows from yesterday P&L positive 800 on the position. And so that kind of offset the loss from the day before. So overall, I made a couple like $200 or $300 on the whole thing, but I wasn't looking so rosy coming in yesterday morning. However, overnight I didn't have a big delta, so if it had continued to spike higher, I wouldn't have lost money either way because I was pretty flat coming in yesterday morning. But I did get really short yesterday morning in VXX. But all right, so that's that, and I don't want to talk too much about my stuff because that doesn't matter. What matters is what's going on with you and how we're going to look at stuff coming into this election. Now, I just caution people to not well, let me just say that the last election, I was very wrong in my assumptions and I really messed it up. So I'm trying to be careful this election and not make some sort of assumption that, like, oh, well, if X happens, that means the market's going to do Y, because we just don't know. I've heard people say, oh, well, if the Democrats win the election, then the market's going to tank. I've heard people say, oh, well, if the Democrats win the election, the market's going to go up. I've heard people say, oh, well, it's going to be not decided for months and there's going to be massive volatility right after the election. So I know people that are loaded up long VXX or UVXY or whichever way they want to be long volatility. They're just long volatility coming into the election here. Other people think that we are going way lower right after the election. So suffice to say, there is a mix of ideas right now coming into the election. And there are people that believe that stuff is going straight up, and there are people that believe that stuff is going straight down. Now, obviously, everybody can't be right. And as sometimes happens when there is such a mixture of ideas, nothing really happens, right? Because there's pressure on both ways and stuff just kind of stays where it is, and it's sort of a non-event. I think that is a possibility here as well. It was a big shock to the world when Donald Trump won the election in 2016. I don't think regardless of the outcome on Tuesday night, I don't think it's going to be as much of a shock either way as it was last time. Let's put it that way. Now, if you think back, I don't know how many of you were trading in 2016. So I know some people weren't, but the market had some amazing gyrations that election night. In fact, it went way down and then it went way up. And I actually do know one guy, Droz, who made a fortune on election night just buying the dip. Markets have been very volatile right now. Look at this last night. I don't know if you've been following what happened last night with the futures, but we have been on a roller coaster. I mean, right yesterday, right on the close, we sold way off. So here's the E-minis. Yeah, I mean, we were up like 60 handles on the E-minis like an hour before the close, and we just pooped the bed kind of right on the close. You can see here's the sell-off. Let's see if we can close up on this a little bit more. But, we were here, and then yesterday afternoon, we just went straight down, and there was a low in the middle of the night. Look, it's 2 a.m. We're at 32.26. We're 50 handles higher than we were at 2 a.m. right now. We've come back a huge amount, and we're still down like, 24, 25. Right now, E-mini's down 26. So we've had a gyration. However, if you look across, you can see we've kind of been in the same area for the last day or two. I mean, we are on a downtrend, though, right? You can see that we're on a downtrend. The question is, do we maintain where we are or do we make a new lower low? But either way, volatility has come in a little bit because we're no longer going straight down, right? We had actually an up day, even though it wasn't up that much. And we've moved sideways a little bit. So vol has come in a little bit. If we take a look at the VIX here, we got up to 41. We barely did not make higher highs last night, right? So the high was right here, and we weren't able to make higher highs. We came close to it, but we didn't make higher highs. So I don't know how significant that seems to you. We'll have to see where we go from here. Will this be the high in volatility before the election, or do we make higher highs after the election? I don't know, but I would have a plan in your mind for how you're going to react depending on what happens next, right? Now, I can tell you what my plan is at the moment is I'm thinking of coming out of, and you have until Tuesday afternoon on the close to position yourself for the election, right? My plan at the moment is to be a little bit short coming into the election, but I'm not sure if I'm going to do that or not. I might just stay flat and just sit that particular moment out and see what happens. There's a lot of smart people out there who are coming in long volatility into this election, so we'll have to see what happens. Just as a programming note, I believe I will be appearing on Option Insider Radio for the election coverage. They have been talking with them about that. Times to be announced later. The term structure looks scary, and I mentioned that when we were talking Monday that there's not a lot of room. There's no cushion here. We are backward and inverted right now, and it is it's a little bit of a. You can read this different ways. You can read this as we are in a very scary situation and things are kind of out of hand. Or you could read it that the futures and everything else is not coming up as much as the VIX. And what that means is that the futures and futures traders are anticipating that we are going to come back down lower very shortly. And thus, if futures traders thought that we were about to enter a very higher vol regime, then futures would be higher. Right now, the VIX is higher than the futures, and the feeling with futures traders is that we will trade lower very soon. That's why the futures are not rushing up so quickly to meet these higher VIX levels. Now, we've been heavily inverted. I don't know if you watched yesterday, but if you look at the spread between the front month future and the VIX, right now on the chart, we can see the cash or the VIX 37.50 right now, the front month future 33.70. So just a little under 4 points difference, 3 3/4 points difference between these two. This was up over 5 points just a day ago, and that's a pretty wide spread between, you're inverted by 5 points. That only usually happens when we're in the middle of a spike and where the expectation is that we're going to come off that spike pretty quickly. The longer we stay inverted and the longer the VIX stays above the futures, the more these back months will move up but right now, any move up in the VIX translates into a move up in UVXY and VXX because there's no cushion for the futures right now. There's tons of pressure on them to move higher. When we have sort of a normal term structure where the VIX is way lower than the futures, then you have a cushion to work with. But right now we don't have a cushion to work with. So pop in the VIX means a pop in UVXY and VXX very necessarily. So that's kind of where we stand at the moment. It's a lot of the trades that I have on are out in March. I know some people have even farther out in time trades, and that gives plenty of time for all this stuff to wash over. One strategy that I've been sort of putting forward is to have a long-term short on where we don't know what's going to happen in the next week, but we do know that once this election stuff is settled, that stuff is likely to calm down a little bit. Just removing the uncertainty of who is going to become president, the market likes to remove uncertainty, and just that happening should calm the markets to some extent. Now, what is the most likely scenario? Well, last time the polls really got it wrong, and there's a lot of talk that the polls this time and everybody is kind of overcompensating. And so even though it appears that Joe Biden has a huge lead, nobody wants to call it at this point because they were so wrong last time. But the odds are at this moment that Joe Biden will win. And so we have to take into account the possibility that he does win, and what does that mean for volatility and the markets? What happens? Take a couple scenarios in your head. Okay, the one scenario people kind of are putting forward, the most likely scenario is that the election isn't decided for a long period of time, and that it sort of goes to the Supreme Court. But there's another possibility that that Joe Biden blows it out, and Trump just sort of concedes. I think that's equally as likely as we have a long drawn out process. But once again, any of these, the other possibility is that the polls once again are off, and Trump comes through with a victory that's decisive. So I think we have to take all of these into account. But the problem is that even if we knew right now what's going to happen Wednesday morning, where we'll be Wednesday morning, we still don't know what the market's going to do. So just keep that in mind, that it's kind of like when earnings come out. Even if we knew earnings ahead of time, we still don't know how the market will react, and nobody can really know that. So I would recommend people be limber and loose on your feet. I wouldn't bet the farm one way or another, because obviously there is a difference of opinion, like there always is with the market. So that's kind of where we are right now. I'm interested in everybody's input. I know I've talked to several professional traders recently who are sort of long a little volatility here coming in, and I don't get the sense as to whether that is because most people are long equity, so maybe these people are using this as a sort of hedge. For me, it kind of horrifies me thinking of being like long VXX or UVXY when the VIX is 40, because I know that the VIX oscillates around an average, and the average is 20 points lower than 40. So I don't really want to be long here. So for me, the question is, do I remain flat or do I get short? And if I get short, how short do I get? For me, being long volatility coming into the election is kind of off the table, especially since we've already had a spike ahead of the election here, and we're already up around 40. The term structure, though, is in a scary spot, and it certainly is in a spot where we could see more downside action. This is what the term structure looks like a lot of times when we're going to get downside action. So, we are backward and inverted. We're not in a ton of backwardation, but we're pretty heavily inverted right now, and we've been that way for like a week. If we go to our to Edward's favorite contango history here, and we can look at this over the last little while, we can see, we were in this nice period of contango, and we were talking about, wow, this is great. We're at 20% contango. Wow, this is great. We spent like 2 months in this great contango that really decayed these products, and all of a sudden, that's all gone, and we are below the red line, which means that we're in backwardation, which means there's pressure on the upside on all of these futures. Now, I think this is an opportunity to ride this way lower, but I don't know. I know it's going lower. I just don't know when. Obviously, UVXY and VXX will take out the all-time lows at some point and move lower. It was a bad year for VXX and UVXY last year. You don't have just bad years forever. These things, when I say bad year, I mean it didn't go down very much last year. These products eventually do go down, and that is coming, and thus I'm still in a long-term short type situation. The question is, when does that long-term short, when does that realize? And it seems likely that will happen pretty soon after the election. However, it's a bummer if you short the VIX when it's 40 and it makes it back up to 60 or 70 again, and you miss out on that opportunity to short it at better prices. So I wouldn't use all your bullets. I'd leave remain limber and kind of small here. That was my advice on last week. That was my advice the week before. I was telling everybody, look, the term structure doesn't look good. Remain small, and I was right back then, right? Before that, I was saying, okay, well, remember last month I was saying, well, we're gonna build contango. We're gonna build contango for a while. I was right about that, and then last week when I said that the term structure doesn't look good, stay small, I was right about that. So I've been pretty good lately at kind of having a feel for what's been going on. And my advice right now is, once again, to stay small. I mean, there's always more opportunities out there in the market, and it's not a crime for you to just stay flat coming into the election. It's not like this is the one opportunity in life for you, and there's never going to be an opportunity again. There's always more opportunities in the market. So, I'm considering just maybe just having almost no position on coming into the election. Why not? Sit one out for a change. It's better than getting run over, that's for sure. Anyway, so there you have it. Let's see. David, do you think UVXY is holding off chasing VIX because of the stimulus that will eventually come? I guess what you mean when you say UVXY is holding off chasing the VIX, you mean that why are the futures not moving up to meet the spot price? I don't see it as I don't see the mechanism between the VIX and UVXY acting any differently than it usually does because of stimulus and whatnot. I could say maybe the market hasn't sold off as much as it might have because there's a possible stimulus, but certainly UVXY is acting the way it usually would if we had a spike. Usually when there's a spike, the futures do go inverted like this. And the reason for that is that futures traders don't want to buy like a 30 or a 40 type future when they have the feeling that vol is going to come right back down pretty soon. Remember, the average spike only lasts like 24 hours. So if you're playing the averages, then you would think that we're not going to stay at a 40 vol for very long, and thus no futures trader wants to be the one who buys the top. So futures remain at a discount to spot just due to the fact that if you're playing the law of averages, spikes don't last very long. I don't think the dynamic has to do with like any sort of stimulus or not stimulus. I think that the mechanism just looks completely normal for any sort of typical spike, in my opinion. And the other thing I would be careful, and I've had several questions about this week, is comparing some price in like UVXY to the VIX. Now, when you've got UVXY or VXX and the VIX a similar number, it just happens that they seem to be a similar number, like they're in the 20s when the VIX is the 30s. At other times, you'll have like UVXY trading $7 and the VIX is still a 30. So don't get confused between UVXY price and the VIX as meaning the same thing. What matters here is the percentage moves, right? So when you look at when there's a day when there's a spike, and we know that right now UVXY is composed mostly of the November future. So you'll see the November future. Let's say the November future moves up 20%, okay? If UVXY is based mostly on the November future, then the future moving up 20% should mean that UVXY moves up 30%. And they will move in terms of percentages. The percent that the futures move up will be UVXY will be 1.5 times that percent. And as far as VXX, if we're mostly the no future and the no future moves up 20%, VXX will move up 20%. The fact that the VIX and VXX have prices that are similar to 30 right now is just coincidental, because over time VXX moves down slowly, and it's not always going to be near the price of the VIX. So the VIX price is a real number of volatility. VXX price is based on these futures, and it doesn't really correspond to a certain volatility. It seems like it might, because right now it just so happens that the VIX price is similar to VXX, but VXX's price does not correspond to a certain volatility. It is an entity unto itself based on the futures, and right after it splits, it might be VXX might be 60, and the VIX might be 20. That doesn't mean that VXX represents a 60 vol. It just happens to be what VXX's price is at the moment. VXX's price does not represent a certain volatility level. It represents it's just like it's just an arbitrary price. And if you want to look at moves to see if they correspond right, I wouldn't look, oh, the VIX is up 10 points. How much is VXX up? Because we know VXX is based on the futures. So I would look at the futures. What's the mix of the futures? We can go on to, if I go to the ProShares website, for example, I can go on the ProShares website and I can look up the daily holdings for UVXY. Right now, we're about 2/3 the November future and 1/3 the December future. So that means that if the November future is up 20% and the December future, if they're both up 20%, then UVXY should be up 30%, right? It's the percent moves that you're looking at. You're not looking at like, oh, well, VXX is $32 and the VIX is $38 or 38 points, because they're not, you can't compare those two things to each other. The VIX is a volatility number, whereas VXX is a share price of an ETF. They aren't related, and I know it can be confusing at times, but you need to look at the percent move in the futures versus the percent move in UVXY or VXX. And I've had several people ask me that question recently. I know it's confusing. Yeah, and the decay does happen. And one way you can look at the decay, if you're curious about it, is to just plot on a chart VXX. And I'm not just responding to Dazboff, your question there. I've had several questions about this week. But if you were to just plot on a chart, and I'll do that for you here right now, VXX versus the VIX, for example, or UVXY versus the VIX. So if I go UVXY, right, and then we add a study of the VIX. And you watch me mess this up 5 times before I do it right now. Let me do it right now. Compare with custom symbol. If we compare this with the VIX, well, it looks like they're correlating, but you see on one side of the axis is the VIX price, and on the other side is UVXY. And this is a short period of time, but if we look at a longer period of time, you see in this example, UVXY starts higher, and over time it's lower than the VIX price. And here we have VIX prices on the left axis and UVXY on the right. And in this example, UVXY starts at 20 versus a 10 in the VIX, and over here the VIX is 60 and UVXY is still 20, so it's decayed over time. Let's try versus TVIX here, maybe because of the decay it would show it a little bit more. Oh, it's not going to show TVIX anymore. Same thing here. You can see TVIX 20, VIX 10, and now if you go like to August, all of a sudden you've got TVIX 100 here, and the VIX is 30, right? So when TVIX went to 1,000, it didn't represent 1,000 volatility. It just meant that the ETF was going higher. So it's confusing, and it's especially confusing just when they happen to be around the same price level is when it gets especially confusing. So here we have the market. I'm going to let you go now, but here we have the market. We're kind of rallied into the open here. E-mini's only down 14 and change right now, and it looks like we're rallying back, but stuff has been just all over the place. So It's a trader's market out there. You can get in. You can trade from the long or the short side and make money at the moment because stuff is just moving all over the place. It's kind of where we are right now. Anyways, I will post when I'll be on, and I'll come on Monday, of course, and I will tell you Monday when I'm going to be on the Option Insider Radio, if that's still happening. And best of luck to everybody moving forward. I know this has been a long show. I have put in a link in the description to the Next Alpha strategy, and you can check out information on that in the description. Thanks for watching. We'll see you next time on the Short Vol Show live.
You're watching Famous Games.
Hold on. What are you saying? Or as we come... Hold on. Warm the idiot masses. What all the question marks, sir? Are you demanding I answer your question? Is that what that is? Like 50 question marks in a row? I don't even have to read chat. As we come closer to December and UVXY has to buy December futures, what effect on UVXY price does a higher option cost due to a higher VIX or a lower option cost to lower volatility? What is higher option? So I think you're asking about how, as we come closer to December, UVXY has to buy December futures. So, well, right now, if we look back at the term structure here, so here's the term structure, right? If we go back to this, so as they're buying, so they're going to have to buy December futures, right? Hold on one second. I'm all discombobulated. You got me all discombobulated. Let me see if I can fix this. Why is this going like that? Let's see. Oh, I know why. There we go. Okay, so here's the term structure. So as they have to start buying December, you can see that what they're going to be doing is they're going to be selling November futures and buying December. Right? And it's the futures are in backwardation. So December is actually cheaper than November. So this is going to create a situation that actually is going to pull the price higher for UVXY compared to the VIX over time. However, the percentage is only 2% right now. So the fact that these are in backwardation is not going to have a huge effect on things. And we don't anticipate this term structure to stay in backward. Usually we don't stay in backwardation for very long. So at this point, UVXY already represents a November future of 34, right? So it's not like we're getting pulled higher over time. We already are higher. And so as we move into December, if the futures stay here, UVXY is going to stay exactly where it is. As far as what you're asking about option prices don't affect the pricing of UVXY. The option volatility, maybe you're referring to option volatility in the S&P 500 that's creating this higher vol, but the DEES futures are now lower than the VIX. Stuff is inverted, so these two have to converge. The spot price and the December have to converge somehow. So we don't know if that means that December is going to move up to meet spot or spot's going to move down to meet December. But usually in a situation where you have an inversion like this, we are in a spike, and usually that means that the VIX is going to go back down at some point soon. That's when the term structure is like this and we're in backwardation, it usually doesn't last very long, and usually it reverses itself where spot moves back down below the futures. And that's what I sort of anticipate happening. I don't anticipate it staying like this for months. I think within 2 weeks, we will have a vastly different term structure. Thank you for your question, and I hope maybe I at least attempted to answer it without leaving you, and maybe you'll forgive me for the 50 million question marks. Does anyone think Joe Biden and Kamala can run an economy? I'm really not going to get into politics. I don't think that the president actually runs the economy himself, whether it be whoever. You know, once again, I'm not going to get into politics because everybody has a difference of opinion, and we're not going to solve it right here. So, if you're saying the VIX it could move higher after the election, you're certainly not alone in that belief. There are many other people that I've talked to recently on the professional trader side that have that belief. So time will tell. We'll have to see what happens. All right, guys, thanks for watching, and I really am leaving this time. Have a great day.